You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options? Well, let's find out together, shall we? My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are binging these days. No TWIFO last week, obviously, for the holiday here in the U.S. I hope all of you had a great holiday week. If you're not in the U.S., hope you had a great week nonetheless. Hung out maybe with some family and some friends. But we're back. Not to be denied this week. Remember, if you're just listening to TWIFO, man, you are missing out on nearly a dozen other programs. Get on over to the full network feed, wherever you're getting the show. Apple Podcasts, Spotify, YouTube, wherever the heck you get it, our app. And make sure you're getting the full kit and caboodle. If you like what you hear, throw some comments, like stars, ratings, reviews, whatever your platform lets you do. All of that fun stuff in aggregate does help new people continue to discover the program. And of course, if you want to discover more content in your lives, you want to come back after Vol Views for a little bit of Options Oddities fun tomorrow, well, you know where to go. TheOptionsInsider.com/pro. Tomorrow, also the first of the month, so we'll have to start thinking about giving away our November Pro Trading Crate. Today is the last day to get your name in the hat, so if you want to be potentially a winner chicken dinner for that. And I just saw what they were sending out yesterday for some other boxes. Some good stuff. So if you want to get in on the action, TheOptionsInsider.com/pro. The place to go to learn more. As we learn who's joining us on the old CME Group hot seat today, I'm pleased to welcome back our old friend, Miss Carley GARNER, the senior analyst and broker over there at DECARLEY Trading. Carley, welcome back to the show. How was your Thanksgiving?
Hi, Mark. It was great. Uneventful, and I think that's the goal, right?
You're not one of those ones that gathers around the table with friends and family and immediately comes to blows, not your family?
No, it was very peaceful.
Very peaceful. That sounds like a good way to celebrate Thanksgiving. Let's see if these markets are peaceful, shall we, listeners? It's time for a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, welcome to the Movers and Shakers, a portion of the show where we break down what the heck is going to be on the show this week. What is lighting up the tape to the light side and to the dark side over there at CME Group this week? Looking at some of our pro listeners, they have their thoughts. First, Option God saying he likes Carley. So there you go, Carley. You got a fan in our live chat yet again. Right. He also says he hopes Energy is on the show this week. Maybe a good bet. You never know. But we haven't announced the report yet, but probably a good guess. And then Frank says he'd be down for some ags or maybe FX. Haven't heard FX on the show in a while. We'll see. Might be a bit of a hard one. Not known to be rock'em sock'em robots markets, the FX world, but on occasion they can surprise us. And then Nickel says he thinks Energy is a safe bet with Carley on the show. Yeah. Oh, and H chiming in says he's always interested in Energy. A lot of votes for Energy, so we'll see. We'll see what we get on the show this week, listeners. Again, you can see this report for yourselves if you follow us at Options on Twitter, if you follow CME Group on Twitter. Both of us tweeted out right before showtime so you could see for yourselves, listeners. And this week, mostly biased towards the green. I would say looks like roughly 60-40, maybe 65-35 green versus red. So not quite the biased in one direction that we've seen aggressively so over the last few weeks out there. But Carley, as our guest, you get to decide where should we begin, to the light side or to the dark side?
Well, it's the holiday season. Let's keep it positive and go to the light side.
All right, to the light side we go, where there are more winners this week than losers out there. Number 5, we're kicking things off in the metals, getting precious, listeners, with silver up 3.54%. So a nice week for silver. I'm sure Uncle Mike, if he was on the show today, he'd be quite the happy camper. It was number 5 in the same direction last week, up nearly 5%. So banger couple of weeks for silver out there, listeners, as I almost sneeze into the microphone. There we go. It's that time of year, listeners. Something's catching up with me here. Number 4, WTI. So we go from silver right into energy. So who was asking for energy? We had Frank. We had, not Frank. We had Option God. We had Nichols. We had a lot of people asking for energy. I think you might get your wish this week. Number 4 is WTI, up 3 3/4 this week. It was number 2 in the other direction last week, off 2.61%. Number 3, man, we're all over the place. We go from metals to energy. Now we're going off to the ags, in particular KC wheat, up 4.66%. It was number 5 in the other direction last week, off 1.12%. Number 2, keeping it in the ags, but to the oil. Soybean oil, in particular, up 4.69%. And number 1, back to the energy, this time to the refined stuff, listeners. It is RBOB, up nearly 5%, 4.94%. It was number 4 in the other direction last week, off 1.5%. So a lot of energy out there. Got some ags, got a little bit of precious. That's just the light side. Now to the dark side we go. And once again, we're kicking things off in the ags this time. Ags back on the radar. Number 5, soybean meal, off 2.6%. So we got 2 out of the 3 elements of the soybean complex. Can we make it a trifecta? I guess we'll find out. Number 4, staying in the ags, this time the softs. Haven't seen this one on our radar in quite some time after being, dare I say it, the most volatile asset of most of the pandemic period. Lumber kind of fell off our radar this year. Back again this week, number 4, off 4.9%. I wish there were options out there that we could talk about. Not really an options beast, listeners, so as fun as it is, no options to talk about there. Number 3, same deal. Oats, back to the ags, off 5.07%. It was number 1 in the other direction last week, up 10.14%. My goodness. Oats on the rampage. Before you get excited, before you get all hot and bothered, 16 contracts on the tape for Oats, so probably not heading out there. Number 2, back to the metals, indeed the precious stuff. It's palladium, off 5.12%. And the number 1 dark side mover this week, we are going back to energy, listeners. It is Nat Gas, off 7.4%. It was number 1 to the dark side last week as well, off nearly 2.8%. So all those folks in the chat who are looking forward to some energy, I got the feeling you're going to get your wish as we kick things off talking about energy.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful world of energy. Get on over to that report, cmegroup.com/TWIFO. From there, go into that drop down. We're going to scroll down 3 slots to Nat Gas, and then from there, we're off to the races here. Nat Gas coming into the start of the show, $2.79 off. Looks like about 20, almost 21 cents, or about nearly 7%, just since Monday. So a lot of this downside in Nat Gas coming this week. Of course, this 7.4%, there was no show last week, so we're actually talking about going back a couple of weeks ago here on the show for our numbers, but intriguing stuff nonetheless. And looks like a pretty action-packed week on the volume front for Nat Gas as well. Usually a decent week, somewhere between 450,000 contracts. Right now, 580,000 contracts on the tape in Nat Gas. So Nat Gas delivering in all respects. Carley, I know you like yourself a little bit of Nat Gas on occasion. What's catching your eye out there in the world of Nat Gas this week?
I do follow Nat Gas pretty closely. And I do, believe it or not, like seasonally, natural gas actually continues to trade lower throughout the next handful of weeks. And that's simply because the market generally firms up going into the winter season as everybody prepares for colder weather. And generally the weather isn't cold enough to increase demand to keep prices high. So we're seeing exactly that play out. That said, despite seasonality, I think we're starting to get to some attractive levels down here. On a weekly chart, yesterday's low was right about trendline support, and we had first notice day for the front month yesterday. So when we start seeing contracts expiring and people forced to roll over and things like that, sometimes it triggers some trend changes. So I think it's just a matter of time before weather or some sort of news, most likely weather related, triggers some short covering here. And speculators are still net short, and there's plenty of winter and plenty of things that can go wrong in the next couple of months. So with that said, I wouldn't get wildly aggressive with it, but I definitely think it's time to start looking at the upside here.
So not wildly aggressive. So not maybe short one put, long five call, bullish risk reversal. Not quite that
Correct.
Wild. Maybe one to one. What are we thinking out there?
Well, you could do something. Unfortunately, we got in, like we had recommended our clients do some option spreads already. So we're kind of in and underwater, but I'm still pretty confident in them. If you're starting out fresh, even better. Maybe you could look at something in the January space, some sort of bull call spread with a naked leg. So if you go to January, probably February, actually, I take that back. February, you should be able to get enough premium nicely below the market that you have plenty of room for error. If you wanted to play it even safer than that, obviously you could just buy calls, but it would take a really big move for just an outright call play to play out in natural gas just because of the way the options are priced. And while I do think we've got some upside potential, I think the days of, wild runs to $10 are way behind us. So I'd be happy with maybe $4.50.
I like that. Some Jan-Feb verticals. I can get behind that. Kind of tame for you, Carley. I was hoping for like the 1x5 or something like that. But sometimes you got to do what the market gives us, right? You got to deal with what they're giving us.
Exactly.
And now, you're right, not giving us explosives back up to 10. That said, you never know. Who knows what Putin's got in his back pocket for a rainy day out there? Maybe an argument for some vestigial Putin call somewhere for just a tick somewhere around the 4 strike. Just keep it in your back pocket all the time, just in case. You never know what's going to go on out there. Like I mentioned, a lot going on out there this week, listeners. 580,000 contracts on the tape. Pretty much almost half of that, almost 41% going up in the Jan contract that has 26 days to go. So looking pretty good. We're going to head out there as well. Again, you don't have the weeklies. You don't have the 0-day fun in Nat Gas, at least not yet. So most of the paper is going to aggregate on this front month contract here. What is the vol right now in Nat Gas, you might be asking? Because, Nat Gas has been one of the more volatile products we've been talking about. Even though crypto started to threaten it a little bit again. We started seeing Bitcoin and ETH getting into the mid to high 50s. They have now retreated off that a little bit. But right here, we have the Jan Nat Gas, 63 and about a third, off about 2 2/3. So still pretty much atop of the leaderboard here for what we're going to talk about on the show today from a vol perspective. But coming in a little bit this week, you could say the same for the skew, just ever so slightly. The puts last week, 4.1% cheap, so not a lot of love for the puts. This week, 3.9% cheap, so slightly coming in a little bit, but kind of treading water there. The calls, though, coming in a little bit more. The calls, 7.2% bid last week. This week, 5.4%, so coming in nearly 2 points to the upside. So the calls, not quite as desirable out there as they may have been. Interesting, if you scroll down the term structure a little bit, listeners, you go beyond the seasonal period of, Jan, February, March, where people are concerned about upside in Nat Gas. You get out to, let's say, the June, July timeframe, and now we're seeing bids to the puts and discounts to the calls, so that skew kind of flips as you go out a little bit, which again, we talk about Nat Gas and the seasonality all the time, but you could see it playing out right in front of you in the TWIFO reports if you just scroll down the page a little bit, listeners. And in terms of action, what was out there leading the dance this week? It was the 3.5 calls. Interesting. In January, going up 30,000 times. I don't know, Carley, you were talking about some modest upside. What do you think about 30,000 of the Jan 3.5s? Did you have those on your radar this week?
Well, let me take a peek at those real quick here. I did not have them on my radar, no. But I can see why someone might be interested in purchasing those. I mean, they're cheap, and we've seen in natural gas, anything can happen. So it's a little bit of a flyer, in my opinion, but maybe they know something we don't know.
I don't know if I love 3.5. I could see an argument for 3, certainly. 3.5 might be a bit of a bridge too far, but hey, 30,000 contracts. Can they be wrong? Actually, yes, they can be wrong. Interesting.
They can.
Interesting stuff here nonetheless. Looks like the big day for those was Tuesday, listeners. 12,000 almost exactly going up on Tuesday, all opening there. Almost 9,000 on Wednesday, again opening. Almost 8,000 today and 2,000 on Monday. So opening all week long. OI coming into today, 26,000. So there's some size OI here. I don't see anything looks like a roll up to the 3.5s either, or maybe they're taking off the 3s, rolling off the 3.5s. I don't see anything like that. So it just seems like what it is. Size opening paper out there on the 3.5s. Again, if you look at this call skew, it came in a little bit this week, so maybe we can intuit maybe some of that is overriding, but intriguing stuff. Right now, 3.5 calls in Jan, listeners. Nat Gas right now in January, that future is about 280, 279. Would you rather buy or overwrite the 3.5 calls? I have a feeling I know which way you'd go, but maybe that might be a fun flash poll we can put out there during the show. Right behind it, only a couple of contracts behind it, are the 2.5 puts. So we got interesting little push and pull here. I kind of expected this more than I did the 3.5 calls. I'm not going to lie here, listeners. We have about 30,000 and almost 200 of the 2.5 puts going up. The big day, Tuesday again. Tuesday, a banger day for Nat Gas. Nearly 10,000 contracts on the tape on Tuesday, most of that opening. 8,700 today, 5,500 on Wednesday, 6,000 on Monday. Again, opening all week long. Today's OI coming into today, 25,200. So today's paper could indeed be opening again. And looking at that put wing, it's kind of treading water, kind of unched, so it's kind of hard to get a good read in aggregate on which way this paper was leaning. But size prints, $1 wide spread there, 2.5 puts, 3.5 calls. Kind of an interesting selection if you wanted to strangle it or indeed risk reversal it. But intriguing stuff nonetheless. And now, if the 3.5s, listeners, they're not doing it for you. They're not outlandish, optimistic, far out of the money enough. Call it what you will. Allow me to present the 3 3/4 calls going up 24,000 times this week. So again, lots of upside. All opening on this one as well. So I don't see any rolling action. Like someone's rolling from the. Why would you roll from the 3.5s up to the 3 3/4 now anyway? But I don't see that action going up anyway. So if they were doing verticals, they were opening on both legs. So 3 3/4 going up about 24,000 times. The big day again, Tuesday, 9,200 on Tuesday, 6,000 yesterday, about 4,000 today, and nearly 5,000 on Monday. Again, opening all week long. OI on this strike right now, about almost 12,000. So a lot of funky paper out here, listener. That's why we crunch the numbers. That's why we run the report and do the show, because you never know what's lurking out here. I can say, let's look really quickly. What is this week's strip of the week? And it looks like it is the 170, the 1.7 puts. That's a funky strike. Looks like they have it going up, again, their usual time frame of April down to September. They don't go all the way through the end of the year, but they get close. Going up nearly 7,000 times, 6,900 times roughly on most of the months it's going up. So these strips are endlessly fascinating. And I know whenever Russell's on the show, he always tries to intuit what the hell is going on with those. Usually they're call strips. Lately they've been put strips again, kind of reflecting where we are on the future. But funky stuff out there. That's not funky enough. But you also have in February, listeners, so a little bit farther out, about 57 days. That future trading right around 275 right now, so a couple of cents shy of the Jan future. And we have 13,000 of the Feb 5s. My goodness, going up. Again, 13,000 times this week. Looks like back and forth, though, opening to closing. Nearly 6,000 going up today. 3,000 yesterday. 2,500 on Tuesday. That was the sole opening day of the week. And about 1,700 on Monday. This is all against OI up today of 22,600. So folks could be bailing on the 5s. I can maybe see an argument for it. The paper today lines up nicely with the 4 halves, so maybe a bit of a 4 half 5 roll down. You know, Carley, I was just joking about having some 4s in your back pocket for Putin. Maybe somebody's got a boatload of 5s and they're getting rid of them here in February next year. What do you think?
Yeah, it looks like it. I'm curious to see. I don't know. $5 is pretty optimistic. So, I mean, we'll see. The good news is they're cheap, but if they're buying them in that kind of size, it's really there's a lot of theta going on there. So, not something I'd do.
Not number one on your recommended list for this week. Load up, put the college savings on the Feb 5s in Nat Gas.
No, I would not.
Let the dice fly. What's the worst that could happen? What's the worst?
Right.
So, yeah, there is some interesting upside out here, listener. Again, it's kind of all over the place, which, again, is why we crunch the numbers out. Let me scroll down really quickly, see if I see any other interesting and or a barren paper. How about the 6s going up in April of next year, going up about 2,000 times? So 6 is actually pretty popular in April and May and June. Looks like maybe a bit of a 6 call strip into the early Q2 into Q3 of next year. Looks like it tops out there. So, yeah, wow. All kinds of weird stuff on the tape this week. That's why we crunch the numbers. And since we're hanging out in energy, let's flip the script. Let's pop out of Nat Gas. Let's go up 2 slots in that product family list. Let's go into crude oil. Then we'll go to everyone's favorite. I hope it's your favorite. It's good old WTI, a.k.a. Texas Tea, a.k.a. the black sticky stuff. Coming into showtime, a 76 even. It's been all over the news, all over the headlines, the increasing downside we've seen out there in oil this week. Of course, turning a little bit up, about 3 3/4%. That's also up about half a handle, or about 2/3% just from Monday. So a lot of that coming since our last show. But Carley, a lot of headlines going on out there in oil. I'm sure your phone's ringing off the hook over there at DECARLEY with questions from clients about oil. What's catching your eye out there, and what are you telling the folks right now in crude oil?
Well, obviously there was some buying over the last couple of days in hopes that OPEC would save the market. I don't think OPEC did enough to save the market. In fact, I don't think OPEC could have done enough to save the market. I think there's a lot of things going on in the back end, working against the price of crude, technologies, increasing production, it's decreasing demand, and all of those things are being witnessed in the price. Seasonally, oil tends to struggle until about mid-December. So I think we have a couple week window of additional selling, and all the chart work that I do points to about 66 to 68 this is on a daily, weekly, and monthly chart. I've been able to pinpoint the same level. So net speculators are still net long. They're holding long positions that they started accumulating in July. And in order for them to liquidate that entire position, which I think is what's going to happen, we'd most likely need to see the high 60s. So that's what I'm looking for.
High 60s. Interesting.
Yeah.
Can we get down there, listeners? Are you feeling a little bit more dark side in the land of WTI? That'd be a heck of a move. We haven't seen the 60s in quite some time. As I recall, Carley, I mean, obviously take away the crazy move to negative. Let's just take that out of our charts. But outside of that, prior to that, the last time we saw that aggressive runoff, I remember a lot of people coming in and saying, oh, WTI is breaking into the 60 handle now. This is where I'm going to sell all my put. So many people reached out to say, oh, I got to buy a 60, got to buy a 60. Then, of course, we all saw what happened, and it blew through that to the dark side. For some reason, I remember that being a very aggressive line in the sand for a lot of people, and it burned a lot of people, which is fascinating. Again, seeing where we are right now, 76, that seems pretty aggressive, but we have seen that in the past. So, yeah, funky times out there. Funky times out there in all things WTI. Let's see what kind of funky times we're having from a flow perspective out here. And we got another banger week in the energy front here, listeners. WTI, similar paper expectations to Nat Gas, somewhere around 450,000 for an average to normal week. And we are seeing pretty aggressive levels out here, 684,000 contracts on the tape right now. So WTI lighting it up this week. I said we're hanging out at about a 76 even right now, and nearly half, again, about 45.5% of the paper going up in the Jan contract. That's about 14 days to go. Now, interesting fact there is that WTI does have the weeklies. They have the contract expiring in a day and 4 days and 6 days and 8 days. So you can kind of pick your poison in terms of duration. So if you're one of our many near-dated zero DTE fans out there, they are starting to tempt you with some products on the WTI front. And they're doing some paper. I mean, the contract going out tomorrow has about 10% of the volume this week. The rest, 0.5, 1.3. So it doesn't seem like there's a very near-dated conversation to be had. Everyone's still congregating for the most part in the front month, which is almost a weekly at this point. So got about 2 weeks to go, but still kind of interesting to see how this paper is lining up here. In all things energy, I sent about a 76 handles where we're hanging out right now. The vol in Jan WTI, just a little bit shy of a 36, 35.91. They took this vol to the woodshed. It's off 7.5 points this week. My goodness. So clearly OPEC not keeping the vol alive out there. Let's go out to the skew, see what kind of change we have. I'm guessing we have a little bit of a move with that big of a vol move. And let's see, the puts last week, 8.5% bid. This week, they are more bid, 10.7% bid. So, yeah, kind of lining up with what Carley was saying. Folks are a little bit concerned, a little bit interested to the dark side there. The calls, 5% cheap. This week, 6.4% cheap. This is starting to look like a decent little equity skew here, listeners. The calls are offered, the puts are bid. I guess folks are leaning and concerned about continued downside out here in WTI land. In terms of action, looks like it was the Jan 70 puts leading the dance by a pretty wide margin. 40,000 almost exactly going up this week. So a pretty active day. The big day actually today. So today, the banger day, nearly 18,000 going up today. And then interesting stuff scattered throughout the rest of the week. There we go. All right. So yeah, about nearly 18,000 today. 10, almost 11,000 on Tuesday, slightly closing there. 8,000 on Wednesday. 3,500 on Monday, opening pretty much the rest of the week. Today's OI, 14,000 only. So the paper today is clearly opening. So more paper opening up on the 70 puts here in January. You like that? As either a line in the sand, listeners, or maybe you're leaning more the way Carley is, that we got a little bit more dark side to come, in which case maybe you want to buy some Jan 70 puts. 2 weeks? Is that enough time to get below the 70 handle? Interesting. We've seen WTI move pretty aggressively, so it can certainly get there. Like we said, we are hanging out right now at about a 36 vol. So put that in comparison. We're seeing, VIX hanging out at about a 13. So that's a decent amount of vol. We could potentially get there. I'm not telling you what to do. I'm just saying it's an intriguing level out there, but probably why so many people are lighting it up out there this week. Behind that, we have roughly half the size. We have about 20,000 of the Jan 80s. So it's mostly dark side, which kind of lines up with the skew this week as well. We have about, again, almost 20,000 of the Jan 80s going up. The big day again today. So today, the banger day for WTI options. 8,300 today. That's against OI of 17,400. So not sure what they're up to today. Monday and Tuesday, both about 4,300 each. Back and forth opening to closing. That's kind of interesting. And then about 2,600 on Wednesday, slightly opening there. So 80 calls. Doesn't seem like there is a ton of love for those, but we did see about 20,000 going up this week. What do you think, listeners? We're at about 76 right now. Jan expiration, 80 or 70. Which will we hit first? Given this paper, I have a feeling I know which way you're probably leaning, but that might be a fun little flash poll to do out there as well. And then behind that, we have the 75 puts, so a little bit closer to home. With the 70 puts, maybe seem like a bit of a bridge too far. 75 puts in 2 weeks, obviously much more doable. 9,100 going up today against OI of about 13,500, so no idea about today's paper. Tuesday, about 5,000, mostly opening there. Almost 3,000 yesterday, and about 1,000 on Monday, slightly closing there. So interesting. If we blow through this 75 handle, I expect to see probably some closing paper on those and maybe rolling down to everyone's favorite, the 70s or beyond. Carley, tons of 70 puts going up, expiring in 2 weeks. What are your thoughts on those? Is that within your time frame? You need a little bit more time, you think?
It is. No, I mean, when crude moves, it moves, and seasonality, like I mentioned, kind of bottoms out usually in mid-December. So I think that's actually almost a perfect time frame. And support comes in pretty close to 70. It's more like 71. So I think, honestly, if you're going to take a stab at the downside, I think that's a good place to be. I will also mention that, I mean, those are some really big numbers going out in there. So someone's trading some size. They're probably legging into strangles and things, because we can see some of the call action as well around the 80 mark. But one thing I'll mention is, if somebody's buying those options, someone else is selling them. And so the closer we get to 70, if we start getting to those support levels around 71, there's going to be probably a vacuum that kind of pulls prices down into 70 and below, and to hopefully, well, eventually maybe our target's around 68, 67, because those that are short that option will be forced to sell futures to, to cover their option risk. And it kind of becomes almost like a self-fulfilling prophecy type of situation or that sort of thing. So those put positions might actually feed on themselves and create the down move without all else being equal. So it's going to be interesting.
Black hole on the 70 strike out there in January, sucking everything towards it, listeners. So Carley sounds like she's on board. You on board with those 2 week to go 70 strike puts, listeners? If that's not long enough for you, then allow me to suggest the February 70 puts. These have about 48 days to go. Those were pretty popular this week as well. Nearly 15,000 of those going up. Again, more than half of that today. 8,300 today against OI of just 7,400. So opening paper on the Feb 70 puts, about 4,000 yesterday, almost 2,000 on Tuesday, a little bit under 1,000 on Monday. So looks like mostly opening throughout the week, clearly opening today. And maybe if that's not doing it for you, 2 weeks, listeners, maybe the 70 puts out in February is obviously going to be juicier, going to be a little bit pricier for those if you're looking to buy. But on the flip side, maybe that gets you a little bit covered. Let's look here really quickly, see if you see any other interesting and or aberrant paper. It's mostly downside, listeners. We got the March 70 puts also going up about 9,000 times this week. So the 70 put strike is definitely the option of the week out here. If you want to look for a little bit of upside, we've got about 2,000 almost exactly of the 90 calls going up here in April. Looks like 1,300 on Tuesday, about 450 yesterday, 245 today. That's all against OI of about 3,200. So looks like opening paper, 90s. Could be a vertical on Wednesday, about 500, the 90-95 vertical. Other than that, I don't know. The 90s here, listeners, does that float your boat? Does that excite you? These are the March. They have about 106 days to go. So they got some time. Not all puts all the time. It's just mostly puts all the time out there. As we keep on rolling. All right, Carley, we carved up energy. Where should we head on our journey next this week? What complex, what product is drawing your eye?
Someone mentioned grains and ags. Let's go there.
All right, to the world of grains and ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. I forgot who asked for that in our chat. I think it was Frank. Yeah, Frank, I'd be in for some ags or maybe FX. Don't think we're going to get the FX for you there, Frank, but I think we can deliver on some of the ags. Hopefully you're down for a little bit of beans because that's certainly what was lighting it up this week. Number 5 to the dark side, soybean meal off 2.6%. And then number 2 to the light side, soybean oil, up about 4.69%. So again, when you want to find these, listeners, go on into the ag drop down right at the top of the list, and then you're going to go, we could hit beans, we could hit all the trifecta of beans if you want, Carley, or if there's another product here that's catching your eye. Where should we start in the ags this week?
I actually have my eye on corn and wheat. Wheat had an interesting close, but we can go beans. It's up to you.
I'll tell you what, we'll hit a little bit of, we'll do soybean oil because it's moving, and then we'll dive into some corn and wheat just to keep the folks happy, give them what they're looking for out here. So let's go to soybean oil. Not one we get to sink our teeth into that often out here, listeners. Go into that grain and oil seeds. You're going to go down about 4 slots, decently active, not blowing the doors off. This is reminiscent of a silver, somewhere around 25,000 contracts a week. This week, 27,000 contracts. If you don't follow soybean oil, listeners, trading 52.25 in that front future. And let's see, looks like most of the action this week, almost 2/3 going up in the Jan contract. It has about 22 days to go. That future also 52.25. The vol in soybean meal actually decently frothy, about 28.5, off about 4 2/3. So ag's one of the few other bastions of volatility here on the TWIFO show every week. So if you're looking for a little bit of juice, equity's not getting it done for you, Treasury's certainly not getting it done for you, then, and FX probably not as well, then maybe a little bit of energy or perhaps a little bit of ags are places you should be looking. Skew-wise, last week the puts 0.5% bid. This week, 3.5% bid. So puts getting a little bit juicier. The calls last week about 2.5% rich. This week, about 0.8%. So the calls coming in a little bit. So we have a modest put skew going on out here. And in terms of action, it was the double calls, the 55 calls here in January. Again, I said we're trading at about 52 and a quarter, so about 2 3/4 handle out of the money. Calls going up 1,800 times this week, listeners. So again, it's a pretty decent trade when you're talking overall volume of about 27,000. Looks like the big day was Tuesday, 1,100 going up, mostly closing there. 285 yesterday, opening 288 again today. So weirdly similar numbers. That's all against OI of a little over 2,000. So could have been opening again today as well on the double calls. Right behind it, we had about almost 1,800 as well, 1,791 of the 60 calls. But this time, you might say, oh, maybe there's a roll from the 60s down to the doubles, something like that. But no, or doubles up to the 60s. Doesn't seem that way because all of the paper almost for the 60s went up today. 1,754 today, pretty much a goose egg the rest of the week. So if you're rolling, you're doing a weird leg throughout the week and then doing the 60s all today. So that would be strange. So I'm going to assume that's not a roll. It's just similar sized paper on adjacent strikes, but not exactly roll action. If you want some puts, 51 puts going up about 1,500 times this week as well. The big days yesterday and today, 650 and 500 each, and that's against OI of 2,200. So a decent little options player here, not blowing the doors off. But Carley, you get a lot of calls these days for soybean oil?
It's not something that the retail crowd focuses on too heavily, but I will say that it's actually a really great market for retail traders, especially those that are interested in just buying options outright as opposed to trading spreads, because you can buy some really close to the money or at the money options in soybean oil, meal a little bit, but maybe not quite as cheap as far as that goes. But soybean oil, you can get some really nicely placed options that have a decent chance of making some money for you, just simply because they're closer to the market for not a lot of risk. And so it's a really great place, especially for beginners that are just starting to learn the world of options and grains and things like that.
I don't think a lot of our listeners really understand the nuances between the oil and the meal and the beans themselves. We probably do a whole show just on that. But you're right, not exactly the most retail friendly, but they do some paper and they're lighting up our movers and shakers. So worth an inclusion. But never let it be said, Carley, that I deny my guests their requests. So let's pop out of the soybean meal, listeners, and let's go into what is usually the big dog of the ags complex. This is corn. Again, going to that drop down, pop out of the soybeans right up into corn. Easy to find, hard to miss. The corn front future trading 483.5, up about one handle exactly, about 0.25%. So not a banger week here for corn. Also not a banger week on the volume front. Usually you might expect somewhere north of 400,000 contracts in corn as well. This week, not quite there, 328,000. So it seems like the lion's share of the interest, the attention, the volume moving on into the energy complex this week. Looks like of the action we got out here, about 40% going up in the Jan contract. Has about 22 days to go. So we'll hang our hats out there as well, listeners. Let's see. What is the vol in corn right now, you might be asking? Not that dissimilar from what we're seeing in the major equities like VIX. VIX is right around a 13, pretty close to it. Corn, Jan vol, 16.5. So a little bit juicier, but not much. In terms of skew, last week the puts 2% bid. This week, almost flat, about 0.5% cheap. So they've kind of swung pretty much to the flat. And the calls, 5.4% bid last week. This week, 1.1% bid. So it seems like both wings kind of collapsed a little bit this week. Again, maybe some of that post-holiday just quiet seeping into the call skew and the put skew out here in corn. In terms of action, though, what was leading the dance out here this week? It was the 490 calls. They were dominating the tape, doing about almost 18,000 contracts this week. The big day was Monday with about 5,700 going up on Monday. Almost 4,500 today, so pretty active day today as well. 4,200 on Wednesday, 3,200 on Tuesday. Looks like opening on Monday, then closing throughout the rest of the week. So maybe we got this little bit of a surge closer to the 490 strike. Folks started getting optimistic, starting putting some on, then took them off as the week progressed. Today's OI on the strike, 7,100. So today's paper, almost 5,000. Could be opening, could be closing. We do not know. And then behind that, we have the 480 calls. So now in the money calls, again, we're trading at about a 483.5 in that front future, listeners. Wednesday, dominating the tape, 8,200 contracts, 6,000 on Monday, and then less than 1,000 Tuesday and today. Looks like opening all week long. Interestingly enough, today's OI is about 8,000 almost exactly. So 8,200 printing on Wednesday, and that's close to what the OI is. So interesting size opening paper on Wednesday out there in the 480s. Carley, you said you're kind of getting a lot of calls out there for corn these days. What's catching your eye out there in the king of the ags this week?
Well, you mentioned a little earlier that the volatility is relatively low in corn, and that's what's got me interested. I see call options are as cheaply priced as they've been in a couple of years. And I think you can buy, I mean, I'm not going to throw a specific recommendation out there, but if you're looking at just buying some corn calls and having some exposure, July options have 200 days to expiration, somewhere around the 550 strike, give or plus, a strike or two, will get you to really good position for less than $1,000. And I think it's worthwhile. If I'm looking at the COT report, and there's more people short corn futures now than we've basically ever seen, at least in the last 20 years. The last few times we've had specs this short, we had some pretty nice rallies. So the recipe is there for a reversal in corn. I'm not sure that I'd go out and say we've seen the bottom, because I do know that there's some farmers out there that are sitting on a lot of inventory in their bins, and from my conversations, it seems like a lot of them are unhedged. And so that's kind of a recipe for some near-term weakness possibility. But if we're talking about between now and July, there's a pretty good chance that corn gets a nice run at some point between now and then. So having some cheap calls out there is probably worthwhile.
Interesting. I guess when times are tough, the hedges are the first things to go for the farmers, Carley, huh?
Right. They're humans just like all of us. And so they want to hedge when they need to, not when they should. And that's human nature. It's not their fault. We're all wired that way.
They can choose between eating or buying some Jan puts in corn. I guess they're going to choose. They're going to choose eating out there. Who can fault them, listeners? You said you're also fired up about wheat, so we'll head out there, listeners, as well. Pop out of corn, go down one slot to SRW wheat, a.k.a. Chicago wheat. Hard to miss it there, listeners. A decently active week for wheat this week, 107,000 contracts on the tape, so certainly nothing to sneeze at. That's 4x what we were just talking about with soybean oil, and roughly 4x what we see usually in a product like silver. Let's see, where is Chicago wheat right now? 597 and a quarter, popping about 20 handles, or about 3.5% this week. So bit of a banger week this week for wheat. That's why probably at KC Wheat is our number 3 mover and shaker this week. I'm sure if I expand that list, let's see if I can look really quickly. Chicago wheat, would come in at number 7, up about 2.34% on the week. So just outside of our light side movers and shakers this week, listeners. Again, about 107,000 contracts going up. There are the spectrum of effectively dailies and weeklies out here in wheat, but we're not seeing the paper aggregate there. The ags, different rules of engagement for these, and right now 42% going up in the March contract that has a whopping 85 days to go. We all know planting, harvesting, that tends to drive a lot of the flow in these ag products, not so much the weekly 0-day phenomenon. But that said, I wouldn't put past any product to be exploding in volume in 0-day, and there's the potential there. There's contracts going away tomorrow in wheat right now. So you can play that 0-day game if you are so inclined out here, even though most people seem like they're not. In terms of action, like we said, 597 and a quarter is where that future is, up 20 handles. The vol, 2370, off a little over 2, about 2.1 points. So the vol coming in a little bit. Wheat, obviously a little bit lighter than corn on the vol side, but still not terrible. If you're looking for a little bit of vol, you could do worse than looking at corn. At wheat. And then skew-wise, got some action out here. Last week, nobody wanted to touch the puts, and everybody wanted the calls. The puts were 5.9% cheap. The calls, 11.3% bid. Now, interestingly enough, we popped about 20 handles this week, so you might think that call bid would come in a little bit, but the answer is no. There's still 11% bid, and the puts are now cheaper, 9.3% bid. So interesting stuff. So if you wanted to come in, maybe a leg into some collars, perhaps. You got some pretty decently cheap puts there in March. You got some decently juicy calls. So not the worst setup I've seen out here. In terms of action, what was leading the dance out here, listeners? It was the 5.5 puts. These were going up in, again, March. So March, kind of the pole position out here in Chicago wheat this week. 5.5 puts doing 8,500 contracts this week. The big day today. So today lighting it up. About 4,100 contracts going up today. That's against OI of only 3,750. So clearly opening paper on the 5/2 puts. Again, these are 47 and a quarter handle out of the money puts. Again, would not have been my first choice, but I'm not out here slinging Chicago wheat day in, day out. So kind of interesting paper out there. And then, like I said, 4,000 today, 2,300 on Monday, mostly opening there. About 1,000 each Tuesday and Wednesday, opening on Tuesday, closing on Wednesday. So interesting, a little bit of back and forth action on these 5/2 puts. I don't know, Carley, does that get you excited? I know you've been looking at wheat. How about the 5/2 puts in March? That seems like an interesting play, to say the least.
Yeah, I mean, to be honest, I'd be more inclined to sell them than to buy them. But we'll have to see. I mean, wheat has been just a complete dog, so I can understand why, the trend is obviously lower. All rallies have been sold into pretty heavily, so I can understand why people would want to have some long puts out there. But from a fundamental standpoint, I think wheat might touch 550, maybe even a little below, but the odds of it staying down there are pretty slim in my camp. I'm looking for March wheat to break above $6, and once that happens, I think we get the trend change that a lot of people have been waiting for months. I mean, it's been you have to be really patient in wheat. This is taking a long, long time for this bottom process to work out, but I think that's exactly what's happening.
Yeah, I can't say I blame you. I'm not inclined to want to buy those March 5/2 puts either. I guess if I had to gun to my head, I'd be with you selling those bad boys as well. We got time for one more complex. I know we have silver lighting it up in our top 5. Haven't talked about that in a while. Maybe there's another complex that's intriguing you. Where should we head next, Carley?
Silver sounds good to me. Let's do it.
All right, listeners, werewolves beware. We're heading off to the shiny stuff.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the wonderful world of metals. I've been talking smack about silver all this episode. It only does around 25,000 contracts. Well, it's proven me wrong this week, listeners. 43, almost 44,000 contracts on the tape for silver this week. So a bit of a banger week out here in silver. So I'm glad we managed to make some time to squeeze it onto the show. Where is silver hanging out right now? 25.60, up about 91 cents or almost 4% on the week. So a nice little pop for silver. Maybe this is the week people are trying to repeat the meme stock thing with AMC and a few others. They remember back in the day there was talk about squeezing silver as well. Maybe that's to account for some of this paper out here. Whatever the case, silver putting up some numbers this week. But silver wants nothing to do with your 0-day stuff, listeners. It's not lighting it up there. Only about 5% of the paper is going up about a day to go. But the actual action-packed expiration cycle, listeners, is again in March, nearly 88 days away. So that's an eternity if you look at a lot of what the 0-day stuff is people are focused on right now. The 29% of that paper going up in March, so we'll head out there as well. That future also hanging out at about 25.60. The vol in silver, interesting. You're talking almost 1-to-1 vol versus underlying. We're at about a 25.60 for the underlying price. The vol in March silver, 25 even, up about a little over a point. So that's actually decently frothy for silver vol. Again, metals, especially the precious stuff, not really known as bastions of volatility. When they have spikes like gold, for example, the vol is usually pretty short-lived, so you can't really rely on it as a viable long-term vol play all the time. But 25, nothing to sneeze at out here in silver. Will it persist? Will it be gone next week? I guess we'll find out. In terms of skew, let's see. The skew kind of staying relatively unched this week as well. Last week it was 3.6% cheap on the puts. This week, 3.1% cheap. And the calls, 7.5% bid. This week, 7.2% bid. So there's still a pretty strong bias to the calls, a pretty decent little discount to the puts. So again, it's not quite as aggressive as what we saw in some of the other products out there in the ags, but a little discount to the puts, a little bit of a bid to the calls. Not the worst, again, collar setup we've seen out there. Certainly better than most of the equity options you're trading out there right now, where you're going to pay for the put and you're going to sell the call for nothing. So intriguing stuff out there. In terms of the big dog this week, it was the 23 puts in March. So again, I said we're trading at about a 25.60 right now. So $2.60 out of the money puts in March, going up nearly 6,000 times this week. Almost all of that today. Almost 4,100 going up today. And then, actually, take that back. Looks like my screen was just kind of going crazy on me. Actually, most of that going up actually on Tuesday. So I said 5,900 going up on this week. 5,811 went up on Tuesday, all opening. So a palooza of March 23 puts going up on Tuesday here. Interesting. Let's look at the skew again really quickly. The skew came in a little bit, but not much. Someone could be drawing a line in the sand there at the 23 level saying, hey, I'll pick up some silver if it dips below 23 by March expiration. I don't know, listeners, 23 put roughly 87, 88 days to go. Would you rather buy that or sell that here in March? Interesting. Carley, have you been watching silver? Looking a little bit robust this week, doing a little bit more paper than I expected. And then what are your thoughts about what you're seeing out there in the shiny stuff? And then what are your thoughts on these 23 puts in March leading the dance? Are you a buyer or are you a seller?
Okay, well, there's lots to unpack there. So I do have my eye on silver. Silver is the kind of market that we're not in any big hurry to participate in unless there's something really like a really extreme sell-off. Then we get interested. And the reason being, I mean, if you look at a monthly or weekly chart, you can see that it's the kind of market where hopes and dreams go to die. Like it just literally can't get out of its own way. But I have a feeling that it's just a matter of time before it finally does break out to the upside. The dollar, in my opinion, has rolled over and will continue to move lower here into the new year and well beyond. And if that's the case, then that alone should put some upward pressure on silver. And I think we're just in a situation where all the bulls have almost thrown in the towel and given up on the idea of silver breaking out to the upside, and that's generally when nobody's expecting it is when it happens. So I think we're possibly on the verge of something pretty big in silver. I'm not someone looking for a retest of $50, which is what we saw post financial crisis, but I think we could easily see the low 30s.
All right, everybody, that music means we have come to the end of our journey through the world of futures options this week. Remember, if there's a product that didn't make it on the show this week you'd like us to talk about, you can always hit us up. If you're in the live, obviously, those come to our attention right away. If you want to hit us up, questions at theoptionsinsider.com. That also works. Of course, if you're on the pro side, you can always use the members hotline to get at us pretty quickly as well. If there's a complex or something, a product, you say, hey, maybe might be fun to include or analyze, or maybe a trade you saw is kind of making you scratch your head. Hit us up. As you saw with Carley and with our listeners today, we're very open to suggestions. This show's all about you folks at the end of the day. And Carley, if folks want to pick your brain on these complexers or maybe a legion of others outside of your appearances on the show, where should they go? What should they do?
Our website is DECARLEY.com. You can sign up for a free trial of our newsletters and kind of follow along, see what we're looking at. You can also catch me on Twitter at Carley Garner.
There you go, at Carley Garner, the place to go to reach out to her. And, of course, you know where to go to check out these reports and a whole bunch more. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires on these products and literally everything else that's trading over there at CME. You want to do fluid milk at 3 in the morning? No one's going to judge you. Our reports are there for you 24/7, 365, because we like you out there. That is going to do it for us on the network today. That's good because my voice could use a bit of a rest. I think I'm coming down with something, listeners. And then back again tomorrow. No rest for the wicked tomorrow. Right back at it. Volatility Views with Carley's nemesis. Mr. Russell Rhodes will be joining us on that program tomorrow. Should be fun out there. Then after that, exclusively for all you pro folks, we're back one final time with a little bit of options oddities. Man, there's been some fun trades going up out there of late. We're going to break it all down. Find out why the Rock Lobster has such a smile on his face these days. Some of those trades working out pretty well. Only one place to go to learn about all that fun, theoptionsinsider.com/pro. And we're back again with our usual slate of content next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.